Is now the right time to buy? House prices are booming again, but there still are huge amounts of risks and uncertainty in the economy. In this video, I'm going to go over the latest statement by the Reserve Bank of Australia Governor Philip Lowe about what he thinks about the Australian housing market. Let's get into it. If this video brings you value, please like for the holy YouTube algorithm and subscribe for more awesome content on the Australian property market, economy and investing. So in Philip Lowe's latest speech, he says, look, I don't want to give financial advice, but sit back while I give you some financial advice. He says now is actually a good time to buy because of all the low interest rates and the huge amounts of government handouts and government stimulus for first home buyers. In some cases, first home buyers are getting up to $90,000, close to $100,000 in incentives, and it is making it, very attractive for first home buyers to build a home right now. In many regional markets, you get $20,000 to build for the first home buyers grant, $25,000 for the home builder grant. You get, 10, 15, 20, depending on the property price. In stamp duty savings, you can get $20,000 to $30,000 depending on their loan. You save by not having to pay LMI. And there are many developers offering other incentives like willing to pay your build deposit or giving you cash rebates to build. Not to mention that Australia has historically low interest rates right now, with interest rates close to inflation. So, it's practically like the banks are giving money away when you factor in inflation. And when you look at how much the Reserve Bank of Australia is printing money, or if you look at this chart, look at the Reserve Bank's balance sheet. It's gone nuts in 2020. And have a look at this chart of the M3 money supply. That's the supply of all money and all assets in Australia. As you can see, it's gone through the roof. So this may lead to inflation down the road. It's definitely not happening now because, people couldn't spend even if they wanted to. But we are seeing a lot of that built up demand now coming out as, people can go out now. In human psychology, if you tell them they can't do something, it just makes them want to do it more. So people weren't able to spend before, it's just making them want to spend now. And we are seeing the savings rate is dropping from around 22% to 18%. So people are getting out there and spending more. Along with this, house prices have increased in every capital city, and also the regional markets are outperforming the capital cities. So, some people say that capital cities always outperform regional markets. That's obviously not happening now. And there's also cycles in the property market. So the capital cities may, go up in price and they become too unaffordable. Then the regions go up. Then if the regions' prices start to get close to the cities' markets prices, then people may start going back to the cities as the price difference, gets closer. Also, the RBA early in the year predicted unemployment to peak at 10%, but now they're saying it's only going to peak at 8%, but it will remain, above 6% for at least 2 years. But, even these experts, they can't seem to get it right. Is it because they're stupid? I don't think it's because they're stupid. I think they've got other agendas and other interests at heart. The market has been completely manipulated. They said, there's going to be they did a scenario that there could be a 40% market crash if there was no intervention. And then also, the Commonwealth Bank of Australia said there could be a 32% property market crash. And I'm starting to see trends here, and something I'm starting to pick up on is I think that the banks put out these articles to scare the government into action. So then the government go, look, we can't have a property market crash. So then the government creates all these schemes, and it makes all the developers and real estate agents and the construction industry happy. And we also did see, the New South Wales Premier's boyfriend got caught taking commission from developers when he was in the government. And I wonder if that's still happening today. He said, it's actually a good time to buy if you're a first home buyer to buy the property you've wanted. Interest rates are low. They're going to stay low, Dr. Lowe said at Standing Committee on Economics public hearing on Wednesday. There are very, very large government incentives for first home buyers, and housing prices really are across the country no higher than they were 3 years ago. Well, that's the case mostly in Melbourne and Sydney, but it's not the case everywhere. He said, so for first home buyer with income security, I think it's a good time to buy. And what I find interesting, I thought the Reserve Bank of Australia was meant to be independent. It was meant to just mainly be there to support the economy. But it seems like now the housing market is becoming a part of their economic tools to stimulate the economy. because a lot of wealth in Australia is tied up in housing, and they know if they can lift up house prices, people will feel wealthier. They call it the wealth effect. Then they're more likely to spend more, or maybe they may even refinance, their house and buy a new car, or go on a holiday, or renovate, and then that stimulates the economy. And even for me, I've just finished building a house, and not only after you build a house, there's still more that needs to be done. I've needed to get fly screens put in, I need to do the landscaping, I've had to get an aircon installed, got new furniture, and there's still other things that need to be done. So even when you build a house, it doesn't really stop there. There's still more economic activity that comes from when people build a new house, because then they want new things. He said first home buyers must agree because first home buyer lending is up about 45 to 46% compared to last year. But he's also saying he doesn't expect for property prices to completely explode because of low immigration. And that's especially true for Melbourne and Sydney. But in other markets where it's not so reliant on overseas migration, and where we may see more interstate migration, we may really see some strong price growth there, like we're seeing in Canberra and Darwin, where they've gone up 1.9%. In Hobart, it was up about 1.3% last month. So if this rate of growth continues there, we could see some really strong property price growth there, and just those areas become more unaffordable. He also said he expects the economy to grow about 5% next year and 4% the following year in 2022. But again, all these forecasts seems to be wrong, so we have to follow the economy more closely to see what really happens next year. And he also finally admitted that low interest rates can drive up asset prices or house prices. So before central banks didn't really want to admit that what they were doing was driving up asset prices and not really helping out the everyday Australian. But now they are starting to admit, yes, it does lift house prices. And in New Zealand, house prices have gone up a huge 20% in 12 months. And the government's now starting to ask, the Reserve Bank of New Zealand what they can do to stop house prices going up so much. And they're pretty much like, well, we can't do anything unless you want us to lift interest rates, but then that will crash the economy as well. So they're kind of stuck in a sticky scenario there. And then they said to the government, oh, maybe you should change the tax laws, but then the government don't want to change the tax laws because then they'll lose votes. He went on to say that the biggest risks for the housing market and the economy was unemployment, and if that unemployment doesn't get lower, this could have some risks, and also the changing mentality towards debt. We're seeing a lot of people pay off debt, which is a good thing for individuals' personal finance, but it's actually bad for the economy. The government, they don't want you to save, they want you to spend everything you have and put the rest on credit. So, they don't really have your best interests at heart. All they want is, that GDP to go up. They don't care really on the individual basis how the everyday Australian's going, because, they've said, we're out of recession now, the economy's booming. GDP went up 3.3% for the September quarter. But actually on a per capita basis, GDP fell by 6%. Things aren't really improving too much in that regard. But what do I think? Do I think now is a good time to buy? Well, it depends. What you have to understand is the Australian property market isn't just one market. Even, for example, the Melbourne market isn't just one market. There's, different parts of Melbourne. There's the southeast, then there's the northwest. The southeast normally moves first. So you really have to go to your suburb or the area you want to buy, figure out what type of property you want to buy, because all properties perform differently. We're seeing house prices boom at the moment, but units still aren't performing that well, because who wants to live in a unit when you've been locked down for nearly 6 to 9 months. Even townhouses and houses on small blocks versus houses on big blocks will perform differently. There's different parts of a suburb that may perform differently. There may be good parts of the suburb, or parts of the suburb where it's in a catchment from a good school zone. How close is it to public transport? Is it on a main road or on a quiet street? These all play huge factors in determining how properties will perform in the long to short term. So what I do think in the short term, property prices will keep rising. Yes, it may be a good time to buy for first home buyers with all these incentives if you don't over leverage, and if you do your research for the type of property you want to buy, and you're in a good financial position, you're not borrowing 7 to 10 times income like some people are. It is maybe a good time to buy, because unfortunately with all these schemes put in place, it is going to stimulate the housing market. Low interest rates will fuel house prices because people can service more debt. The banks, because normally people go off by what the bank tell them. The bank, a year ago says you can borrow 400,000. People would take 400,000. Now they may say, okay, you can borrow 500,000. People are going to take that and then they're going to use that to bid up property prices at auctions. And people may think, oh, look, why were you wrong and all that stuff before. And that's mainly because I had to just go off the facts at that time, and I don't want to be biased on this channel. I don't want to be, a property spooker. Every year says property prices are going to boom, but I also don't want to be, a doomsday to say, it's going to be a 70% crash every year. I just have to go off the facts and the data at that time. In March, April, it was looking like that there was going to be a crash unless there was government intervention. And in some of my recent videos and even my interview with Mark North, I did say recently that I think property prices are going to go up because of the intervention by the government. And a lot of economists, even the major banks got it wrong. The RBA scenarios got it wrong. And that's because they use free market logic and they use it based on the data they have at that time. But of course, the government always steps in to manipulate it, so it's so hard to predict what's going to happen. And then it could go the other way. If the property market does start overheating, APRA could step in like they did in 2017, and when interest-only loans were going crazy, then they stepped in to make it hard to get interest-only loans, or like when there was a banking royal commission and the banks completely stopped lending. But there still are some big risks in the economy, like businesses trading while insolvent, how they're going to ease off JobKeeper. I think they'll most likely just keep on extending it. If we look back at what they did so far this year, they just keep on extending these temporary programs to create FOMO for the government schemes for property, or for the programs for the economy, to keep the economy going. They just keep on extending them because they do not want to let this property market crash, because that's one of the last things we have in town here in Australia is property and mining. So guys, what do you think? Do you think now is the right time to buy, or do you think you're going to wait to see what happens next year? Let me know down below. For all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, hit the like button. It really helps out their channel a lot. If you haven't already subscribed, I'll keep you all up to date on the latest property market data and news that's going on in Australia. And of course, I'll see you in the next video.